Welcome to the Building and Growing podcast. We're delighted to have Mark Robinson from Superscript with us today. Welcome, Mark.
Thank you very much. Great to be here.
You're most welcome. So, look, Mark works for Superscript, which is a fantastic insurtech that I'm sure you'll give us more of a background of later on. But let's start off with you. Tell us about yourself, Mark.
Yeah, so I've been in the insurance sector for coming up to about 20 years now. Always been a broker, broker by trade. Traditionally, I was involved in the early days in financial institutions insurance, so looking at fraud and crime policies for banks and building societies.
Nice.
As most things do when sort of traditional FI turned into fintech, got involved in fintech quite heavily, which led me into things like online gaming, into crypto, and generally all the sort of high risk things that insurers don't particularly like to insure. So that's a sort of a very brief history of my expertise. I've, as I say, worked in the broking sector since I left school for a varied amount of businesses, from family run independents to some globals, and now find myself with a super exciting business at Superscript.
Indeed, yeah, fantastic. And look, before we dive into Superscript, it'd be great just to maybe give some definitions to the audience about what a broker does.
Sure, absolutely. So a broker is in effect the middleman, if you like, between client and insurer. Mm-hmm. So there's really two models of insurance. One is the direct route. So this is if we look at the sort of direct line route or the online systems, and we have an area in our business which looks after that type of business, and we call it non-advised.
Yes.
So effectively, if you know what you like and you need an off the shelf policy, you can go online and decide what you want to buy, and you click on it and buy it.
Sure.
No advice whatsoever. That's just what you want.
Yes.
So that's a sort of direct type of insurance. You deal with one insurer, you buy.
Yeah.
The other side is advised. So this is where a broker comes in, an intermediary, if you like, which is what I do. So and it's generally for businesses that need more of a technical or an advice-led approach. So you will transact with an insurance broker. They will come in and ask you questions and do a risk review of what you need, what the risk exposures of the business are. It's then our role to present that risk into the insurance market. So effectively, we need to sell your risk to the market.
Yes.
So we will go out to a number of insurers, and the better job we do of selling your risk to the market, the better terms you get, the better premium you get.
Sure.
So yeah, the difference between the sort of two sides of insurance purchasing is generally the direct route or the route via a broker.
Okay.
And as I say, albeit Superscript have the opportunity for both.
Yes.
The side of the business I represent, which is the advice side, is the broking side.
Fantastic. Thanks so much for that, because it's people hear about insurance brokers, insurance companies, underwriters, and there's just a lot of terminology on there, but that really lays it out in a simple format. Non-advised, which is self-service, and then advised, where a broker such as yourself helps out and collects data in order to sell that risk and talk about what your business does to the insurance providers.
Correct, that's right. And I mean, ostensibly, we like to say we are the internal insurance department of any said business. So, and on top of that, it's the job doesn't sort of stop when we place the initial business.
Yeah.
So obviously, a business doesn't stay the same for 12 months. Things constantly change.
Yes.
And a broker will work with the client to make sure that the policies constantly stay up to date. So there's the insurance needs of client day one will be very different to the needs of insurance the client sort of day 30 or 60.
Indeed.
They might have new contracts, or they might look to go and work in the US, and there's various things that a business will do through the stages of growth where the policy needs to grow with the client, and that's very much a broker's job to make sure that those policies are always fit for purpose.
Indeed, and I think that's something that people don't necessarily consider, and indeed might be something that trips companies up later on.
Absolutely, we see it regularly where a client will have an insurance policy they bought on day one of the business.
Yeah.
I mean, 3 years later, they've raised however many million, they've got 20 staff, yet the policy they bought was in place from day one, where they had maybe two co-founders and no contracts in place. So yeah, it's a very, very common occurrence. So yeah, anyone out there that may have an insurance policy they bought 3 years ago and haven't had reviewed, you're not on your own.
Yes, indeed. So let's dive into Superscript, Mark. Are you able to tell us a little bit about the background of the company and how it was founded?
Yeah, absolutely. So the business was founded in 2015 by two co-founders. And really it was to approach a gap in the market in respect of brokers not really having a full understanding of various sectors. So as I mentioned earlier, there's two sides of the business. There's a non-advised side and an advised side. So the non-advised side, and I'll be very light touch on the non-advised side because that's not the area I work in. So I don't want to do those guys any discredit. But the non-advised side is very much for very early stage startup businesses who again may need an insurance policy for a short period of time, may need it to fulfill a contract.
Yeah.
They can go online and, as I say, just pick what they need.
Yes.
The great thing about Superscript is, and one of the great things that allowed us to sort of scale the business as quickly as we had when we first founded, is that we're very sort of heavy on data science and engineering. So what the team do a lot of, and what we have the benefit of being a sort of startup scale up in the insurance space, is we don't have any legacy systems.
Yeah.
So we've been able to track the size of a business.
Yes.
So if we have a startup, for example, comes on and buys a non-advised product, they will go ahead with that product, but then they may grow, they may become a regulated business.
Yes.
The policy you have in place may no longer be fit for purpose.
Yes.
So those types of data points, and I believe we follow sort of 3,000 data points across clients in terms of what we're looking for. Again, that allows us to grow with those businesses.
Yes.
In effect, we founded the business to get rid of some of the major pain points that are around in the sort of tech space, and they are tech founders are very time poor.
Yes.
Insurance is a necessary evil. We're fully aware of that. We need to make the process as simple as possible. It's a very old-fashioned, paper-heavy sector. Is the insurance game. If somebody needs a quote, they'll be sent X amount of documents that are generally PDF. They'll need to print them out, pass them to 15 different people within the business.
Yes.
It's a bit of a nightmare. So one of the things we came along to do was to try and make that whole process a lot easier. And whether that's via digital application forms, whether that's via sort of customer portals and all this type of thing, it's just trying to make the whole process a lot simpler. On top of that, there aren't a huge amount of brokers out there that fully understand the tech sector.
Sure.
So what we're finding is tech founders are receiving quotes that may not be fit for purpose. They may find that they're dealing with brokers that are struggling to understand some of the nuances or some of the technical languages of tech.
Yeah.
Because of that, the policies aren't being sort of sold into the market on the right basis, as I mentioned earlier. And because of that, we tend to find that a founder may receive insurance that has onerous terms, maybe too expensive.
Yes.
On some respects, it's not even covering what the client's activities are. So it was really to try and make the business really was founded to try and I don't like the term disruption, but it was really to try and disrupt that old-fashioned sort of PDF-heavy, paper-based insurance world, really.
Indeed. And I think insurance, whether it's for a trip or whether it's for business insurance, is always a little bit of a pain. Let's say. I was reading a multi-trip policy wording the other day, and luckily I realized what I was buying and was able to cancel it and get another one because they were trying to sell £400 £400 coverage for my laptop, which unfortunately is worth a little bit more than that. So
yeah.
But look, just to dive back in there, you mentioned that there were some, let's say, data points or nuances about businesses that insurers typically get wrong that Superscript is really able to address. Just wondering if you're able to give us a couple of examples.
Yeah, well, it's going back to what I mentioned earlier. So one of the main examples we see is if a business, when a business starts to scale, they may undertake contracts overseas, specifically in the US.
Yes.
So a vast array of insurance policy will typically exclude sort of US work. We'll find out from data points we have if a business starts to sort of write contracts in the US.
Yeah.
Similarly, if a business becomes regulated, there's a huge swathe of policies that will exclude regulated business.
Yes.
Again, if an application goes into the FCA to become regulated, the policy you have is no longer fit for purpose. We need to move you onto another policy.
Yes.
And then again, whether or not it's data points based on fundraising. So if we see that a business has been successful in raising a round, or if there's been a sudden influx of employees, or a sudden exit of a bunch of employees, and again, it allows us to really make sure that those policies that are in place are always fit for purpose.
Yeah.
It's just not something that's done in the traditional insurance market. It's very much traditionally left on the shoulders of the client to notify the broker when something's changed. And as I say, we're a necessary evil, so we tend to be thought about when we're required to have a contract put through, or when it's renewal time. We sell very expensive bits of paper that say if you have a claim, we're going to pay out. And the proof of in the pudding is when that claim's made. So to have systems in place that make sure the policy is always the right premium, the right cover is something that, just as I say, doesn't really happen in the sector.
Yeah, fantastic. Look, it sounds like a very proactive approach, wherein you're actively analysing those data points and starting the conversation, as opposed to leaving the onus on the business. And actually, from the business standpoint, they're not experts in insurance.
Absolutely.
So I'm sure they're very grateful to be informed. Actually, look, these things have changed. We've noticed that. Therefore, would like to propose, that you might get a new type of policy.
Absolutely, it's one of those things. So when we've looked at the main issues from sort of CEOs and CFOs of businesses, the main gripes with insurance are cost is usually up there, complexity, the time it takes, and sort of jumping into that, the jargon that's used by insurers and the sort of the mess of documentation and what have you. If we can streamline those things, those issues, and just make the whole process a lot less time consuming and a whole lot clearer, then we're on the right track. And we truly believe in the sort of relative short amount of time that we've been trading. We're kind of getting there. I think we've got a lot of work to do, but certainly the strides we've made in the short period of time have been quite big.
Fantastic. And what has the response of, let's say, the insurers been to these new data points, a new level of, let's say, detail and due diligence on businesses that you're able to bring them? What has their response been? Well,
insurers love us, right? Because insurers like to write business. It's a commercial world. What they don't want to do is write bad business. So what it enables us to do is present risks to insurers on a very transparent basis.
Yes.
It allows us to adequately highlight the key risk exposures. And again, we employ a lot of people that have sort of more tech expertise than the majority of brokers out there. And what that truly enables them to do, and sorry, going back a step, we have people within the business that specialise in fintech. We have people that specialise in medtech, in AI, in digital assets, crypto, blockchain.
Yes. Yeah.
What that allows us to do is understand the nuances of those businesses. So what we're able to bring to the insurers is not just business from clients that are actively looking to buy, but also it's an opportunity for us to be able to educate the insurers to say, well, okay, that you may not have been particularly interested in writing fintech business for X amount of years because you are unsure of the risk that's there, or you're unsure of the historical loss data. What we're able to do, what the experts we have are able to do is go to those underwriters with a really true and deep understanding of that sector and say, okay, well, we understand this type of business and we see that this type of business faces these risks.
Yes.
And actually this is how that business mitigates against these risks. Therefore, it brings the risk to the insurer, to the underwriter down,
yes,
and it enables them to write more business. So what we find is, and so I joined the business in January,
yes,
and I find now that there are insurers that I used to approach in previous companies that would decline risks.
yes.
We approach them at Superscript, and they're all over the risks that we send them.
All right.
Kind of frustrating,
Yes.
but great. Now I'm in the seat of Superscript, but the insurers they want to be, insurers want to be writing the next big thing. They want to be on the sort of the edge of the emerging risks.
Yeah.
If they're working with a broker that understands those emerging risks and can adequately present those risks in a way that makes them feel comfortable enough to write them,
Yeah.
then they're going to love that. And certainly what we're seeing is exactly that. We have some great relationships with some insurers that, as I say, in the past, I've struggled to get them to look at submissions. So
Indeed.
It's a very, very, very sort of interesting way of working.
Yeah, fantastic. And look, I mean, there are a couple of sort of sectors that you mentioned there which are particularly emerging when I think it comes to getting insurance for them. I think, say, crypto and generative AI. What are the key challenges that, let's say, the brokers face when it comes to trying to gather information in those emerging industries?
Yeah, I mean, the number one issue, and we get a lot of gripes from prospective clients we're dealing with when they've been speaking with other brokers, is just generally the lack of understanding.
Yeah.
So we work with a lot of fintechs that sort of cross over into digital assets.
Yeah.
But actually don't really have any digital asset risk. They might be working with an exchange that takes all the risk.
Yes.
The issue is, if it's not broached correctly, as soon as a broker goes into an underwriter and mentions the word crypto or digital assets, then it's immediate decline.
Yes.
If it can be explained correctly, then obviously the underwriters are a little bit more amenable to write the risk. So the major frustration, certainly on the digital asset side, is just the general lack of understanding from the broking market.
Yeah.
And again, the digital assets team we have are like nothing I've ever worked with before. The expertise, the experience, and the credentials and the credibility the guys have got in that digital assets team, not just in the UK and Europe, but across the US as well, is very impressive.
Yes.
And also cost comes into it as well. So digital asset insurance ain't cheap.
Yeah. Indeed.
But it can be a damn sight cheaper than it could be when it's explained and underwritten correctly. And again, it comes down to the presentation. And again, another frustration is the general lack of support from insurance markets. But again, that comes down to experience and knowledge from the broker and approaching the right market. So there are insurers out there that love writing digital assets risks. There are insurers out there that love writing AI-based risks.
Yes.
It's just knowing who they are and those insurers trusting the broker, that the broker knows what they're doing.
Yes, indeed. And Mark, insurance is, let's say, a globally purchased product. What markets does Superscript operate in?
So we are a dual regulated business. So we are regulated by the FCA here in the UK. We're regulated over in the Netherlands. So we have an office in Rotterdam.
Yes.
That allows us to trade across Europe.
Fantastic.
Future plans, potentially looking to get involved in the sort of APAC regions. The US, we have partners across the US where we can write business over there.
Yeah.
Generally speaking, if we have an inquiry from a risk pretty much anywhere on the globe. We'll be able to find a way to do it. We have partner brokers and relationships spanning pretty much every territory that we're legally allowed to write business in.
Fantastic.
We can sort of cover those areas.
Excellent. And earlier on in the podcast, you mentioned a data point, which was being able to see when a company has raised funding. So I'm wondering whether we're able to just dive into what insurance requirements companies might have by stage, because a pre-seed company may have different requirements to a seed or a Series A type firm.
Yeah. So it's something we see regularly. So we work with businesses from all stages. We say it's sort of from startup to scale up to grown up, if you like.
Yes.
So yeah, there's various different stages of cover that need to be in place. What we generally tend to see is seed businesses will generally require the sort of minimum general liability. If they've got employees, they'll need some employees liability. They may need to look at some professional indemnity, which is errors and omissions, wrongful advice, wrongful design. When they get to when they sort of go up a stage, they're probably looking to get some directors and officers liability cover in place. Maybe looking to get some cyber, some crime policies in place. And then when they start to get to sort of Seed A and above, we'd probably be looking at things like intellectual property rights cover. We're probably looking at things like key man cover to cover sort of key directors of the business.
Yes.
We'd be looking to recommend some employee benefits type covers, which is great for recruiting and retaining talent at that size. So yeah, we do see companies that will come in straight off the bat when they're starting up and say, look, we take a diligent view on risk mitigation. We want the whole suite right, so we're looking to have the liabilities, the cyber, the PI, the D&O.
Yeah.
But obviously, as a startup company, costs can be quite sort of restrictive. So we do tend to find that certainly PI and the liabilities are the first ones that businesses will tend to go for in the very early stages.
Yes. And
then we'll step up towards that sort of more complex or expensive cover, if you like, along the intellectual property rights and that type of thing.
Sure, indeed. Are you able to share any war stories of, clients who may not have got the right insurance or should have?
So there are some quite a few stories. So I've seen, and it's sort of away from tech, but I've seen a business where we turned up to do a renewal one year, and it was a manufacturing process. We turned up to do a renewal one year, and they had big manufacturing unit, big sort of big warehouse facilities and what have you. Client wasn't interested in insurance in the slightest. Again, necessary evil. I'll see you at renewal. I'll see you in 9 months to sort out the sort of renewal and start the pre-renewal process. Did the renewal, turn up 9-10 months later to start the pre-renewal, and there is an additional building that's been built. When was that built? It was built about 8 months ago. Yeah. So it's generally been sat there, fully assembled with equipment in it.
Yeah.
For 8-9 months uninsured, like a couple of million quid's worth of building and machinery just sat there uninsured. And again, it comes down to that, and albeit it's away from tech and it's more of a sort of commercial industries. The story's the same, right? So it's the insurance will last down the pecking order more times than not. And this is a founder that is running a successful business that has a million and one things on his mind before insurance. They've built a new unit, and the last person that springs to mind to tell is the person that's going to insure it. So there's things like that. There's as I've alluded to earlier, we've done health checks on people's policies where they bought the policy off the peg 3-4 years ago when they were a startup business. And the policy is just not fit for purpose, and the business has gone through sort of regulation and scaling and directors in and directors out and replacements of boards and what have you, regulation and things like that. And the policy has just been written on a, as I say, an off the shelf basis. The premium's a couple of £100.
Yes.
We've done a review on it, and it's just like, if you have a claim, there is no chance this is paying out. Even so much so that if we were to send a submission to that particular insurer, they'd decline the risk because it's not on their trade category. And it's a danger for it's a big danger for non-advised business, because more often than, and I buy insurance, right? I know how it works. More often than not, there's a drop-down box.
Yes.
And if your business kind of shoehorns into one of those things, then you're going to click it. So we've seen companies, fintech businesses involved in cross-border payments that are insured under a policy that they've clicked a software developer on a drop-down box. And again, it's one of those things where, okay, I've paid £200 for a policy for the last 3 years annually. I've not had a claim on it. If someone asks to see my insurance, I've got it.
Yes.
So, who's in the wrong? Again, we're kind of an intangible cost until something goes wrong.
Indeed.
So yeah, there's quite a few policies we've done health checks on that are fairly frightening. Thankfully, when you raise this with the client, 99 times out of 100, they'll take our advice on board, and we can get it fixed up.
Yeah, indeed. So I guess a key takeaway there: if there is any material change in your business, speak to your insurer.
Absolutely, yeah.
And if they don't want to listen, then speak to Superscript.
Yeah, speak to me straight away. That's fine. That's fine.
That's it. Fantastic. Look, Mark, in terms of Superscript's product roadmap, are you able to discuss what it's got in the pipeline, say, for the end of 2023 or 2024?
Absolutely, yeah. So continued focus on our UK business. So really growing that across the UK and really pushing the brand out there.
Yeah.
I mentioned earlier we have the office over in Rotterdam.
Yes.
So really a really big focus for this year is really growing that European business and really pushing the brand out there. So we've recently done a rather large out of home campaign over there.
Okay.
So the amount of times I've sort of walked around Rotterdam recently, and I mean there's Superscript on every bus stop, every tram stop. We've got one of the largest digital advertising boards in Rotterdam, I believe.
Wow.
So pushing the brand across Europe is going to be really key to sort of our plans over the course of the next couple of years.
Right.
We want to continue investing in our internal systems. In the data that we receive. We really want to keep pushing the machine learning that we're working on, and really drive that to make sure that we can really hone that and make sure that it's really delivering some real tangible value to our clients and prospective clients.
Yeah.
So that's really key on the agenda. And I guess finally, the easiest one, we want to become the best, the strongest, the largest SME broker in the UK.
Fantastic.
That is number one on the roadmap.
Yeah.
Albeit I've been with the business for not very long. We've got the team to do it. It's an exciting business. It really is.
Fantastic. And look, Mark, I think it would be amiss if I didn't ask a question about ChatGPT and AI. What impact do you see AI having on the InsurTech business?
Oh, it's an interesting question. Having just attended an AI seminar over in Valletta a couple of weeks ago, I should be all over this. AI is an interesting one. So there's many use cases for it in the InsurTech sector. I think number one, we've got to be very careful with what we're doing with it and how we approach it. So I've seen multiple thought leadership pieces from insurers and from brokers, either jumping on the AI bandwagon or absolutely writing it off and throwing it in the bin.
Yeah.
Where do I sit with it? I don't know. I maybe on the fence a little bit. I think it can be a good thing. I think what it will enable us to do is certainly if we start to look at sort of insurance clauses within contracts, AI will enable us to sort of run contracts through and pick out where the insurance clauses are and where insurance may be able to assist in a contract. Whether AI will be used for more parametric types of insurance in the future, whereby if something occurs, then an insurance policy will immediately trigger and pay out. I can see that happening. It'd be remiss of me to say, it'd be naive of me to say that AI won't play a part in the insurtech sector, because it absolutely will. We know that when these emerging technologies emerge, very quickly they'll take over, and it'll be something very simple that occurs, and we'll all sit around thinking, why didn't I think of that, and ride off into the sunset with suitcases full of money. It will always need the human touch. What I don't think we can do is just let AI run things and replace humans in insurance. I think AI will always need a line management, if that makes sense, into humans. But yeah, what it will do in the insurtech space, I'm not entirely sure. I think it's a bit of watch this space. I certainly think it'll play a big part. I really do.
Yeah. It's going to be super interesting. I saw a video the other day of a Tesla AI salesperson making a call to someone, and it was scary because there was a little bit of a delay from when the end client, let's say, gave an answer to a question to then the AI salesperson, responding to the answer. But there might come a point where we don't know whether whoever we're speaking to at the end of the phone is a human or a robot.
Absolutely. So, well, we've already seen. I mean, ChatGPT will now write the majority of emails. Certainly cold outreach emails. I know of businesses that are using ChatGPT for cold outreach emails. I've attended panel sessions where the panelists have openly admitted to the fact that I've used ChatGPT to write my responses to these panel questions. I've openly seen. I've seen panel hosts openly admit to the fact that all these questions have come from ChatGPT, and we'll see where it goes. So it's a fascinating tool. Regulation, I think, will be key on it. It's going to be an interesting ride, I think.
Indeed. Mark, we've covered a lot today, and I was wondering whether there are any, let's say, top 3 takeaways that you'd like to share with the audience.
Yeah, absolutely. So I think number one is, in terms of the insurance piece, I think you've got to work with a broker that understands your sector. So if you're in medtech, work with a broker specifically that understands medtech, fintech, digital assets. It's really, really important, because what you're going to get from that is there'll be a lot less process to be involved with, because instead of ferrying backwards and forwards answering questions, you're generally going to be speaking to someone that gets the business. So that will cut out a lot of the legwork. What it also will do is make sure that as I've mentioned earlier, the terms that are received from the market are going to be the best terms, and they're going to be with the right market. So I think certainly number one is work with a broker that understands your sector, and a broker that you trust. Just adding to that, we see a lot that investment heavily relies on trust. Obviously, if you're a business looking for investment and you have a really strong suite of insurances in place, you can go to the investors and say, look, we're serious. We're a serious business here. We're mitigating our risk. We're a grown-up business. We know what we're doing. So the trust in working with the right broker with the right expertise is key.
Indeed.
Number two, I would say certainly try and mitigate as much risk as possible. Maybe slightly bizarre saying this from sort of my seat as a broker. Obviously, I want people to buy more insurance, but the more you mitigate risk and the more you can demonstrate your capability to mitigate risk and your and the way that you're taking risk seriously within your business, it's only going to reflect well on your business when you're in front of an underwriter.
Indeed.
And again, work really closely with your broker on that. If there's things you can do internally with the business around cybersecurity protocols and all that type of thing, just do it. Because the benefits in terms of not just the premium reductions and the terms you receive, but in terms of your business being a steady, sturdy business that again is going to attract investment, I think that's really key. And number 3, I've touched on it a number of times today. Make sure that your policy is always in line with your current business. So whether or not that, I mean, if you're working with Superscript, that's a given, right? Because we're going to do it for you automatically anyway. But making sure that you're in regular contact with your broker, or your broker's in regular contact with you, making sure that your insurance policies are growing through every stage of your business is really important. Because when you need it and it's not there, it's terrible.
Indeed.
So it's really making sure that every step along the journey of a business, the insurance policies are sort of pulled up and keeping up to speed with the business as well.
Fantastic indeed. And look, I think that final piece of advice, it's very easy to send an email or jump on a call with your insurer to discuss what's changed and find out because if you don't, it can be costly.
It can, We're not a bad bunch, so generally we'll have a nice conversation with you.
Indeed. And look, I mean, the other takeaways were also, particularly important. I think risk mitigation is something that isn't, let's say, thought of enough. It always costs less to take preventative action than to take reactive action, and that it doesn't matter what industry you're in. It's easier to prevent something than to react to something.
Absolutely is, absolutely.
Excellent. Mark, thank you so much for joining us today.
Pleasure, thank you.
And we look forward to continuing to watch Superscript grow.
Absolutely, great stuff. Thank you very much.
Thank you.
Thank you.